In this video series, this part we're talking about scalping, we're talking about when to scalp. This may seem like a very unimportant thing, but I urge you to watch this one, guys, because it's super important. It keeps you on the right side of the conditions of the market. When to scalp. This is like, it appears to be like a dull, boring thing. Oh, when to scalp, who cares? I want to scalp, I'll make loads of money. Yeah, we all do, we get it, right? We want to make as much money as possible, or the least risk as possible. But with scalping, particularly with any trading when it's optimal is one of the keys. I mean, everything is a kind of a key and it's a combination of getting it right. But if you're scalping when conditions are wrong, you are basically just throwing £20 notes out the window, £50 notes out the window, because you're just misaligned with what's going on. You're never going to get it right. Scalping is very much about aligning yourself with the waves and the ebbs and flows of the market. So with that being said, let's have a look. Number one is determine the optimal conditions for you for scalping. So your strategy. So in other words, if you go back several videos ago, we talked about following the market or fading the market. If you're fading the market, do you want to be in a vicious uptrend? No, you don't, because constantly you're going to be selling new highs and getting run over, selling new highs and getting run over. So you don't want to be trading that. Do you like high volatility environments? In which case, do you want to be trading during a lunchtime on a Thursday before data on Friday, for example, which is traditionally going to be a quiet day because no one's positioned until the data? Do you want to be trading a volatile open? If you don't like volatility and you prefer a stagnant market because you want to kind of move back and forth, some offers and bids, you've got to determine what your strategy is and then determine the conditions for you. So that's the first point. It's not for me to say you must trade volatile conditions, guys, just because I like volatile conditions and I like trading the open and I like trading extreme moves after data and I like trading, you know, if we go back and look at a couple of videos, the spikes on data. If it's not for you and you like to trade small range bound markets, then that's fine. You can become a specialist at that. The point is determine the optimal conditions for you and then move to the next one. So the time of day. For me, if I'm scalping, it's usually going to be at the open and at the close. Why? Because there's a flurry of orders coming at the open. We've got the opening hour. Sometimes it's 30 minutes. Sometimes it's a bit of a damp squib, but often we get a good drive, we get good volatility. That's an opportunity to scalp. I went through a phase where the open was just my worst enemy. Couldn't get a read on it, couldn't handle it. So backed off, learned some strategies, learned some different approaches, put some stuff in, did some research, started to go small, and now the open is the best time of the day. I consider it's the best time of day for scalping, specifically for trading something like the DAX. So what I mean by the open, I probably should have clarified that before, is specifically if you're trading the indices. So if you're trading the indices, the cash open is the open. If you're trading stocks, obviously it's when they actually open. If you're trading Forex, you haven't got this. If you're scalping Forex, not so much, there isn't so much an open. Yes, there is when we kind of do get a London open and we get US open as money flows. I know they're 24/5. So you could trade them based on, if we use the proxy, if you go back and check those videos about the proxy type of trade, you could trade, let's say, pound based on the London open, or you could trade US dollar, some kind of US dollar pair based on the US open, the cash equities open. But you're kind of aligning yourself with that. So open, close is nice as well because there's a lot of money flowing in, knowing that there's a bell going to go and they can't do any more business. And that's a really good time to trade. So number three is when news flow causes volatility. Again, most of us thrive on volatility as scalpers. So when we have news flow, like the example we had earlier on with the Euro US dollar on the non-farm payrolls, that's the time to get involved in the market. That's the time to go, yeah, you know what, there's likely to be some movement. I'm a scalper, I want to get involved in that, I'm going to trade it. So when there is stuff going on that's drawing other people into it, that's when we want to be riding those coattails as scalpers. Number four is after earnings. Big time this. Often we have the earnings pre-market, earnings will come out in a stock this is, and then you'll have the whole day where you can scalp to your heart's content the move, because there's volume, there's flow, there's liquidity, there's all the things that we need as a lifeblood of a scalper. So often you say, okay, I'm not going to trade that stock until we come after earnings. And you might even get 1, 2, 3 days of decent move out of it, or decent volatility out of it, that you can scalp. Then it might go quiet, you discard it, you wait until the next earnings come out, or you go to the next stock. Number 5, really good one, this at key price levels. This saves your eyesight, your back, and your sanity if you're a scalper. Because if you're sitting there all day long and you're like, oh, I want to find a scalp, I want to find a scalp, I want to find a scalp, you will drain out, you will lose all your concentration, and it's very, very tricky, especially when it goes quiet. The easy thing to do is to say, listen, I only trade, I want to scalp at key price levels. I want to scalp long around this level. I want to scalp short around this level. I want to see how price responds to this level to decide whether I want to align myself short or whether I want to align myself long. I want to see what time it gets there, all this kind of stuff. So you can set alerts at your price levels and then only trade at those key levels. That's a really optimal time to scalp, guys, because you know that key levels have stops brought in, they have limit orders brought in, they have lots of people watching. That's why they're key levels. And again, going back to what we said earlier on in the video, when other people are interested in it, we should be, because we can ride on these coattails, and all we're looking for is that little high probability chunk, stick it in the pocket, move on. Okay, number 6, during uncertainty. So uncertainty is generally if there's something going on that people are concerned about the stock, or they're uncertain about the overall economy. So that might affect the currency pair, it might affect the index, it might affect something, the interest rate, if you're trading interest rate, the commodity. So that's when you can really focus on the market and really start to trade it. So example would be very recently, you know, the kind of a bit of uncertainty around the economy in the US, a lot of kind of downdraft causing a lot of the tech stocks to back off. Great time to be a scalper, super good, trading the things like, you know, Netflix, Tesla, Facebook, Amazon, all the ones coming off those highs. So you'd zoom in and you focus on scalping those. Then when it starts to calm down a bit, you'd pull yourself out of it and look to something else. Perhaps then it looks to crude oils. Crude oil starts to rally or starts to come off highs. Perhaps there's a spike in natural gas. So you're going where the uncertainty and the money flow is, because as scalpers, generally speaking, we want the volatility, we want the volume, we want the liquidity. And so uncertainty brings people in, and it brings them from an emotional perspective as well, meaning we can hop on those coattails and we can kind of capitalize, if possible, on those moves. So guys, those are 6 times when to scalp. This may seem like it's a bit of a nothing, but it's so important, because you don't want to, especially when you're scalping, which is super high intensity, you don't want to be wasting that energy. Just consider yourself, you've got a fuel gauge, right, or an energy bar, and every time you sit in front of that screen, look at the screen, it's deducting your health. Like if you were thinking of a game, it's deducting your health, it's deducting your fuel, smaller until it runs out. And if you're trying to trade on empty, you're going to get really low performance. So you're trying to preserve that energy bar, you're trying to preserve that fuel tank. And so knowing when to scalp and when to be 100% focused gives you much more of a chance to like make 4 or 5 good trades in a row, back off, wait for the next one. 4 or 5 good trades, okay, I've made a few losers there, back off, rather than just constantly trying to look for the trades. And also the higher probability trades as well, not only to kind of be more economical with your focus, but also to get a better probability, guys, because often the higher probability trades are at key levels. They are when news flow is there. They are at the open and at the close. They are during uncertainty.